Welcome everyone to another podcast of Empowered Investing with Leading Ladies. This has been a labor of love for me, as I know that women in particular are not a high percentage of investors in commercial real estate. And so our goal through the podcast is to educate and inspire women to look into the possibilities of investing in commercial real estate. And today we have a fantastic guest, Amy Sylvis. She is the founder of Sylvis Capital. And Amy has done just that. She has transitioned from a former life into now investing in commercial real estate. So, Amy, welcome to the podcast.
Oh, Arleen, thank you so much for having me. This is such an honor. I really appreciate it. And thanks for all the work that you do. Just an incredible mission with the podcast that I'm completely aligned with. So this is great.
Oh, wonderful. Yeah. Over the last 14 years, we have grown our real estate portfolio from up now 770 million in assets under management, over 35 properties, all multifamily. So, I've walked the path and I've, been there alongside our investors, working hard to provide better communities and better investment opportunities for folks also. So really admire what you're doing also, Amy, on your side. So tell us about your background. Where did you grow up? How did you, what was your career initially? Because everybody tends to have a career in something else before they
Yes.
jump into real estate. So tell us more about you.
Sure. Yeah, I am a fourth generation Los Angelino. Not many
Okay.
people are from LA, but my great grandparents came out here over 100 years ago. But yeah, still live in Los Angeles with my amazing husband. Thank God my parents are out here in LA as well, and our large extended family. So that's where I was born and raised and still live out here. Family is really important to us. So that's kept us local. Yeah, I went to the University of Southern California and went on to have a career in biotech for a number of years. My
Okay.
story is a little bit nuanced, so we can get into that if you'd like. But yeah, that's what I was doing prior to getting into real estate.
Great. So tell us a little bit more about that. So you were in biotech. What were you doing? And then tell us a little bit about your why in terms of moving into real estate.
Yeah, I was in sales and marketing, have a kind of a personal health journey that we can dive into as to what led me into biotech, but nothing felt more meaningful than to participate in drug discovery, drug distribution to help people with grievous illness. It just really got me up in the morning, got me excited. And I can't say enough great things about the industry. It was just so rewarding. So yeah, did that for a number of years. To rewind, I was actually, and I talk about this a lot, so I'm a full open book. I was born with a really severe health condition called cystic fibrosis. A lot of people have heard of it. You may not know what it is, but when I was born in 1981, I was supposed to live to be around 8 or 9 years old. It's a progressive lung condition where I was in and out of the hospital most of my childhood. My parents weren't sure if I'd be able to go to high school, let alone college, let alone hold down a career. And so I was really fortunate by the grace of God to be healthy enough to even go to college, have a career that was really meaningful. But unfortunately, in my mid-30s, I became too sick to work and actually had to medically retire. So while all my friends were getting married, having children, buying a house, building their career, I was stuck on earning around $3,000 a month and trying to make that work out here in Los Angeles and desperately trying to not be a burden on my family and on my parents. So I was looking for something that could help me earn income when I was in and out of the hospital and too sick to work. And I stumbled upon real estate. So I can tell you more, but that's the long and the short of it.
Yeah. Wow. Lots of strength there to work through all of that. So really admire you for that and finding a way into your next career. So what made you interested in commercial real estate?
Yeah, I went to get my MBA after working several years in biotech and thought it would help me maybe stockpile more money. If I was a higher earner, maybe I'd have a bigger pile of money to draw on when I inevitably, might be too sick to work. Sadly, that day came, but I'll never forget a few weeks after graduating with my MBA, I was at the Santa Monica Library and stumbled upon this purple book that I'm sure a lot of people have heard of called Rich Dad, Poor Dad.
Mm-hmm.
And I'll tell you, I'm from a very average middle class household. My dad still does manual labor at almost 72 years old at his construction company. So this concept of hands-off income or passive income or money I didn't have to trade my time for was not something my family taught me. It wasn't something I learned at a top 25 MBA school. It wasn't something culture taught me. It was that book by Robert Kiyosaki, and the light bulb went off. I thought, oh my gosh, there is a way for me to be able to have positive contribution to a community and to residents, help my investors, and also create income where if I was healthy enough, to travel and enjoy, free time, I'd be earning income. But also if I was stuck in the hospital ill, I'd be able to earn income as well. So that really changed my entire outlook. And I was on a mission to build, a bunch of assets that could cash flow, whether I was working or not.
Yeah. Oh, that sounds fantastic. Well, you found the book, Rich Dad, Poor Dad, which, yes, a lot of us have read.
Yeah.
And that's been a catalyst for us to really see how you can be something different and rely on passive income
Yeah.
or other people's time and money, right, spent on activities. So after Rich Dad, Poor Dad, how did you seek out other educational tools, seminars? What was your path on that side of it? Because I strongly believe investors should educate themselves before they just give their money to somebody or put their money into an investment.
Definitely. Yeah. And you described it perfectly. Once my paradigm shifted, I went on to hire a coach and really dig into understanding how commercial real estate specifically worked. While I was doing that, I intentionally passively invested alongside other successful people who'd had a long track record to really get to know this space. I wanted to learn while I earned and lay the groundwork to maybe one day, I hoped, run my own real estate private equity firm and be on the active side of the business. But I ended up being a passive investor for about 10 years with people that I absolutely loved and respected, made some great money, but also learned tremendously, which was my main goal as well.
Mm-hmm. Well, one of the things that we like to talk about is how do you select that sponsor, that general partner to invest with? So give us your thoughts on that, because I always think it's very valuable for investors to figure that piece of it out. It's one of the biggest pieces, in my opinion.
Couldn't agree more. I think it's more important than the property itself. I think it's more important than the market. So we are certainly aligned. As you can imagine, I've learned quite a bit over the years. I wouldn't say I was as astute when I first started off, but values alignment was the first thing I was looking for. Do these people care about, squeezing every single penny out of grandma on fixed income? And if the investors miss, 2 cents of distribution, everything's turned upside down? Or do they have the mission of not only making money, but also making sure we provide safe, secure housing for folks and improve the community? So that values alignment was first. And then second, what was their communication and accessibility, mindset? Because as you and I both know, when you're a passive investor, you're the passenger on the airplane. You're not flying. And that's great. That's an amazing setup for countless people. But I want to be able to talk to the captain if something's going on. I want to see, if there's turbulence up ahead or if things are going great. Either way, I'd love to hear what's going on there and being able to have full transparency there. So in addition to the values alignment, understanding what communication preferences were, transparency, reporting, all of those things mattered. And then, of course, track record and, those types of items as well.
Sure. And in terms of the parts of the country or the asset classes you've invested in, tell us a little bit more about that.
Sure. Living in Los Angeles, I love my city, but goodness gracious, is this not the place that I want to invest? it's wild to say in May of 2026, I think we're only a couple years out from the COVID eviction moratoriums that were in place. So, living in Texas, I know there's a sharp contrast there, but so yeah, I invest in the Southeast and the Midwest. We're always looking at markets where population is growing, household formation is growing, jobs are growing. There are fair and balanced rules between tenants and landlords. We're not looking to evict grandma when she was in the hospital and missed her rent payment by a week. That's not what I'm talking about. But the other side of it is, like in Los Angeles, where we see 9, 12-month almost squatters' rights scenarios where it can just make it really difficult for businesses to operate. And that's what an investment is. So yeah, we love markets like Texas, Oklahoma, Alabama, Indiana. We've had really good success in Tennessee and Georgia. I could go on, but that area of the country fits what we're looking for and what mitigates a good amount of risk for our investors as well.
Great. Well, I know that you have utilized kind of the fund to fund model, I think. And so, what I like about the way we approach real estate, very similar to you, is that we do bring people in to buy as a group. So walk us through, how you work with your investors. Where do you start? How do you cultivate them? And how do you, communicate with them along the way and bring new opportunities to them?
Yeah. I think very similar to you, Arleen, we lead with education first. We believe that no one knows better than an investor what fits their risk tolerance, their time horizon, and their goals better than them. So if we're able to educate on what best practices look like for evaluating an investment, evaluating an operator, understanding the economy, all of those things, then we can empower folks to make the best decisions for themselves. So we lead with education. We give ongoing education in addition to what we give when folks are onboarded. And we develop a relationship and help folks get to know us, our values, what our goals are, the whole 9 yards there. So it's funny because probably similar to you, when folks decide to reach out and kind of explore working with Sylvis Capital, feel like they're always kind of on guard. Maybe they're used to being pitched or sold or something in this space, but it's really disarming for folks to realize we're just here to understand where you want to go and to see if we're a good match for what you're looking to do. And sometimes we're not a good fit. That's completely fine. For other people, we fit like a glove. And people go on to invest with us over and over and over again. And we have a lot of success together. So yeah, it really is about figuring out good mutual fit, providing ample opportunity for education, and then partnering together on what helps fit their goals, their risk tolerance, and their time horizon.
Fantastic. So, how do you identify new opportunities for your investors?
Yeah, we love to investigate other people that we can partner alongside. This was one of the biggest, most eye-opening areas of commercial real estate investing for me. It is a team sport. I have, I joke with folks when I tell them, it was truly about 10 long years of me trying and failing to get into this space. And one of the biggest reasons I failed was because I didn't have a team around me. I just thought, okay, I want to do this. How do I figure out how to do it? As soon as I linked arms with like-minded people who had similar values and goals, that's when the magic happened. So we find wonderful people to partner alongside, to operate the deals, find them, underwrite them. It really takes a good number of people to make these opportunities work well. And it's just such a beautiful thing when we find those great partnerships. So we develop, similar to you talk about investors evaluating the people involved in the deal first, we do the same. Once we find that there's a good match in terms of values, track record, geographic goals, then we look at the property and understand how that aligns with what our investors are looking for. Sometimes our investors are really fascinated by cash flow and they really want that first and foremost. Others are looking to grow their wealth, maybe mitigate some taxes. So we try to offer a variety of opportunities to fit what our investors are looking for as well.
Great. And I know one of the areas that we find people sometimes overlook how their investments are doing is IRAs. So
Mm.
do you work with folks on IRAs or 401ks and how to maximize those investments?
Thank you so much for bringing this up. I think it's just, it brings a smile to my face because we've managed about half of our investors use retirement funds to invest alongside of us in these deals. It is, and this is, we could go down a whole rabbit hole, but it blows my mind that Wall Street has convinced people that the only thing that they can invest their retirement in is stocks and bonds. And furthermore, Wall Street's convinced people that that's what diversification is, investing in the exact same asset of paper assets. And, oh, I'm diversified. So yeah, letting folks know, obviously, you know, you and I are in real estate, but gold and silver bullion, private lending, businesses, oil and gas. There are so many other opportunities that folks can diversify into income for their retirement account into. So yeah, we love to talk about that. You know, there's a whole host of custodians that do that. We're not necessarily partnered with anyone, but yeah, again, going back to that educational piece and letting folks know you may have access to more investable capital than you realize is so empowering, and our investors love it.
It is, because I think that sometimes is one of the myths, right? Is I have to have millions of dollars to invest in real estate, but you really don't.
Right.
Especially if you're coming in with somebody like you or like us, that we're bringing folks at smaller investment amounts, that makes it more accessible to a lot of folks. So I think that's fantastic. You know, one of the things that you know is important is, you know, when you were getting started, um, did you have a business plan, or did you, you know, say, okay, well, this is where I want to be in 5 years and how do I get there? Or how did you determine your goals in the beginning, and how have they shifted over time?
Yeah, yeah. This is a bit of a nuanced thing for me. I love that you bring it up because one thing I neglected to mention is I received a miracle drug right before COVID for my health condition. So
Really?
it really flew open the doors in terms of what was possible.
Mhm.
So this question really strikes a chord because I wasn't quite sure when I first got started what I was capable of. I knew I had some physical limitations. I was doing everything I possibly could to overcome them, but health issues are health issues. Once my health was restored at age 39, it was actually a bizarre limiting belief because I wasn't really used to setting big, hairy, audacious goals for myself because typically my health got in the way. So I had to have a really, you know, introspective conversation, and, you know, obviously with my husband and family about what I wanted to do and how much I wanted to grow this. And we determined that the guiding light was really, you know, we wanted to make sure we grew the company, not for our own wealth, but to help our investors, because very often people don't even know that this opportunity is available for them. They just think I've got to buy a property myself and operate
Mhm.
it amongst being a
Mhm.
parent and my high powered job and having some hobby. You know, how does all of this work? So as long as we have investors that are interested in growing alongside of us, we're going to keep going as long as we can properly maintain our quality controls,
Mhm.
provide those returns that we promise to our investors, and do good by the community. So we're not looking to be a BlackRock,
Mhm.
but we are looking to have contribution and help our investors. So maybe a little bit of a different answer or unconventional there, but we really let our investors and our impact on communities be our guiding light.
That's great. Yeah. So to date, how many investments have you been a part of?
Yeah, so I've been a part of 21. We've gone full cycle
Wow.
on three,
Okay.
close to a fourth. And yeah, we currently have around 18 properties and 3,200 units. All of this is assets under management.
Okay. Great. Are they all market rate properties, or are any of them affordable, or?
That's a great question. So yeah, they're all conventionally their market rate, but we
Okay.
do love our Section 8 housing vouchers, and you know we definitely do
Mhm.
that aspect of affordability too. It's so funny because my California investors shudder at this because Section 8 is a completely different ball game out here in California
Yeah.
than say, you know, Tennessee or Alabama or something like that. So we actually love those residents. We think they We love the kind of the public-private partnership there. But in terms of, overall affordable housing under that umbrella, we don't have that yet.
Okay. Well, and the role that you play at Sylvis Capital, tell us, what you do day to day. I think it's important for people to know what's involved with running a business like this.
Yes, yeah. So the first role I do is asset management. So the reason why, I don't need to speak for you, Arleen, but we may have this in common. But the benefit of buying 100 plus, 150 plus unit apartment complexes is institutional quality property management. This isn't mom and pop, side hustle. Nothing wrong with that. But there's a different level of sophistication, of competence that only works with these larger properties. So that gives us as asset managers full-time leasing staff, full-time repairs and maintenance, all of these great things that help us deliver a great quality of experience to our residents and to the surrounding communities, to be good members of the community. But that being said, as asset managers, we have to meet and manage our property managers, making sure that because they don't always have the investor's interests at heart. They may have their own, narrow way of thinking through things, which is fantastic. So anyway, long story short, we meet with property management. There's, with the number of properties I have, that takes up a good portion of the week. Investor calls, obviously love doing that, getting to know folks, helping folks understand if this space is right for them, thinking and providing education to our investors, and then backing up and doing a lot of economic research, market research, and honing skills there to make sure that we're always making the best decisions for our current properties and how we manage them, and considering what we might do in the future in terms of future acquisitions. So it is definitely not hands off on this side, but it is an incredible business. There's nothing else I'd rather be in.
Oh, fantastic. And so you're looking at kind of a second level underwrite, et cetera, I'm sure, on all these deals. So about how many opportunities do you look at a year, would you say?
Oh, gosh. I would say last year I calculated it was upwards of about 700. We only had 2 purchases last year, so we tend to do anywhere between 200 to 400 deals that we analyze before we decide to purchase. And to your point, some of these opportunities we analyze, and right off the bat, we see, okay, this isn't in the right market, or it's not the right size. Others we get as far as analyzing, underwriting, digging through, and taking a look with a fine-tooth comb, understanding if the assumptions, the projections, all of those things are in line with what we're looking for in terms of the risk and also the benefit. So can take quite a while, really depending upon the level, but it is a big part of what we do as well.
Fantastic. Well, the numbers side of this business is very important. But tell me about, how you believe you're making an impact on the communities and the people that live in these complexes or in these rental homes.
Absolutely. It may sound small, but for us, it's really about the details. If someone has something that's wrong with their unit, are we responsive? The stove stops working. If the toilet backs up, are we changing the world with that? Not necessarily, but are we changing that person's world? Absolutely. If anyone's gone through not having a functional bathroom or kitchen, or a mold issue, it can really throw your life off. So being the type of owners that have responsive, capable, folks that are able to be on site, helpful, and do it with a smiling face matters quite a bit to us. Also being good resident, or being good community members. We have a property in Atlanta. When we purchased it, oh my goodness, it was a bit more of a war zone than we anticipated, but there was crime, there was prostitution. We don't typically buy these types of deals anymore. Right. This was back in 2021. But long story short, if you look on any crime website, there's always little dots that represent different crime. There's no more crime. There are no more crime dots around this property.
Yay.
We hired private security services. Children are now able to walk around on the property completely free of being tormented by, nefarious actors. So that not only makes a difference on the property itself, but as you and I know, that expands throughout the community. Good influences like that have a cascade effect for the surrounding community. So we just love rolling up our sleeves and making a difference in that respect as well.
Yeah, no, I think that's probably the least rewarded thing that people talk about when they're investing, but it really is the one that makes the biggest impact. We have our own in-house management company, and so we do manage all these properties, and it is important. The resident events, where you're bringing them all together for paint a picture night, or whether it's, Mother's Day or whatever it may be, those things do create community, as you talk about, which is so key to having the right, environment for the residents to really thrive in, because it's their home and their kids'
Yeah.
homes, or if it's grandma, it's where the grandkids come. So it's
Yes.
very, very important.
And it's
So,
good for business too.
what,
Sorry, I didn't mean to interrupt, but
no, it is.
yeah, that's what I love about this business is we're on the same side of the table as our residents. The happier they are, the more likely they are to stay put. And one of our biggest expenses is turnover cost.
Yeah.
So when someone moves out, we've got to do a lot of work and spend a lot of time doing that. So if we can keep our residents happy, maybe they'll even refer people, and similar people know similar people. So if they're great residents, they're likely to refer other great residents, and that impacts our bottom line for our investors. So we're on the same side of the table as the people that we serve, and that's an incredible feeling.
I agree. We say they get to pick their neighbors, right?
Yes.
That our residents get to pick their neighbors by referring them. And we do find, we'll have maybe a young couple move in, and before you know it, the parents have moved in, or the grandparents have moved in, or aunts and uncles. So they create a community, among themselves within this broader community. So I think one of the least recognized benefits of investing in commercial real estate, in my opinion. Yeah. So, one of the things that I talked earlier about were myths, the one myth being you have to have millions of dollars to invest in real estate. What are some of the other myths you hear from investors that they come into thinking, oh, no, I can't do this. It's not for me. So what are some of the other myths?
Yeah, I think it's definitely the amount of money, as you mentioned. I think the other thing too is I don't know what it is, but people have gotten in their mind that there's some sort of massive threshold in terms of net worth. Maybe they've heard of a qualified client where they must be, have $2.5 million in net worth. So the accessibility, without getting in too much of the details here, but, for some types of deals, you don't have to be an accredited investor or have a certain amount of net worth. So it's not only the investable cash that you have, but you don't have to necessarily meet some sort of threshold. There's a bit of nuance there, but it is a myth that I commonly see. The other thing is I hear of people that think that they have to invest near where they live. And living in California, I can tell you firsthand, that couldn't be less true. Or you see a lot of California investors specifically go to neighboring Arizona and neighboring Nevada, which I'm not saying are bad states, but they tend to become a bit more overvalued too, because there's a lot of California money that's desperate to get out of California. So we have the luxury in the United States of investing wherever we think it's best and following the data, being data-driven investors and understanding what makes a great market. That's the beauty of investing alongside someone like you, someone like myself, where we're picking these properties, we're evaluating them, we're managing our amazing property managers, or maybe we have them in-house like you do. And that allows folks to have the freedom to invest anywhere in the country that they see fit. And that can really be incredible for their portfolio.
It really can be. I think you're exactly right. And one of the reasons why a lot of people choose to invest in real estate is to gain financial independence. So walk us through how you define financial independence. How have you kind of set your goals to reach it? And, what are you doing to help others reach financial independence?
Oh, gosh. Arleen, you asked the best questions. I love this. These are such topics I'm so passionate about. if anyone's like me, I grew up thinking I had to just accumulate the biggest pile of cash possible and just kind of chip away at it. And gosh, I really hope that that pile of cash lasts long enough. My perspective was a little bit different because I wasn't sure how long I was going to live, truth be told. But I think everyone can resonate with that kind of mantra. Again, reading Robert Kiyosaki's books really changed for me into thinking, oh, how much income am I earning every month that I don't have to trade my time for? And is that more than my monthly expenses? So, for example, if I earn $5,000 a month in cash flow from my real estate, or let's be honest, we could talk about dividends, we could talk about clipping coupons from bonds, whatever that looks like, regardless of how it's hands off. Is it hands off? If it's $5,000 a month and my expenses are $4,500 a month, I'm free. Your hands-off income has to be larger than your monthly expenses, and then all of a sudden you're free. So it is a huge change in mindset. And that doesn't mean we don't have savings. We don't save for emergencies. We don't save for bigger purchases. It's not a kind of either or. I see it as an and. But the freedom that comes, and take it from someone who was too sick to trade her time for money, the freedom that comes of having hands-off income that's greater than one's expenses is indescribable. So you and I both work with Coach Trevor McGregor, shout out to him. But the idea of being able to do what we want, when we want, where we want, with whom we want, for however long we want, those freedoms is incredibly empowering. And that's been my guiding light and something I teach to my investors as well.
Yeah, I think it's so important because you do. I mean, time is the most valuable commodity we have because we have a finite amount of it every day and every month and every year, right? So the way you use it and being able to choose the way you use it, I think is so incredible. Very, very incredible.
Everything.
Well, one of the things that I'd like for you to share is, if there's a woman out there who hasn't invested in real estate, what advice would you give them, start to finish, on how to get started and how to select the right opportunities?
Yeah, I think first and foremost, just shifting this mindset, because I didn't get this growing up. I don't know, Arleen, if you did, but the fact that women are great investors. Women are phenomenal investors. And just because maybe you don't see other women in your circle or on TV or in the media, that doesn't mean that you're not capable. So that mindset shift, I think, is the first thing, of understanding that because of how women ask questions, how they think about risk, how detail oriented they are, they're probably just as capable, if not more. If not more, that's what I hesitated. They're probably more capable, I would argue, than men to invest. So thinking that you can do it as opposed to maybe it's not a space for you is the biggest change. And then secondarily, getting around other women that are where you want to be, building relationships, asking questions, maybe getting a mentor, or just, someone, that accountability partner that you can be around is an absolute game changer. It was for me. I didn't necessarily intentionally seek it out until I realized, oh my gosh, this is so empowering. This is actually changing my results by getting around other women that are in this space. And then, of course, getting the education. If, it might not be familiar to you. I've heard some women say, like, oh, I'm not really a numbers person. You don't have to be. This is a skill that can be acquired. It's not as though those of us that are in this space, men or women, just were born this way and, oh my gosh, it's intuitive and I've never had to study. There are free resources on YouTube, on podcasts, that you can get yourself familiar with. And you can enroll in courses if you want, get mentors and coaches that can guide you. But really investing in your own education is massive, and it doesn't have to be incredibly expensive. And then lastly, making sure that your values and your goals align with the people you're investing alongside. The numbers are important, obviously, finding an investment that you understand and that you believe in, but it is a team sport. So partnering with other people that really see the world the way you do and have similar goals will carry you really far.
Yeah, no, I agree completely. And you talked about podcasts. Tell us about your podcast. It's Secrets to Abundant Living. So tell us how you started that and what your why was behind that and what you
Oh,
hope to accomplish.
thank you. Gosh, I can't believe it's almost, we're in our third season. So we're about 2.5 years old. But yeah, my goal was to really think through and talk about abundance, overflow, prosperity in terms outside of just money. I think as a society, we're taught that money is the end all be all. And if you talk to people who have a lot of money, it's not as though they say, oh, I don't want my money. I'm just going to give it all away and I don't need it. But it's not necessarily what brings them fulfillment. And I'd actually argue money can be a great vehicle, but I don't know that it's necessarily a destination. It's the great vehicle for having more time, having great relation, or having the time to spend to get great relationships, being there for people you care about, contributing to your community and causes that you care about.
Right.
So the theme of the podcast is to really talk about not only the vehicle, so other ways to generate hands-off income, but talk to people who define abundance in various ways. So gosh, we've had a woman that was going to donate an organ to somebody. And in the donation process, she found out she had invasive breast cancer in between mammograms. She would have never known that she had this had she not wanted to generously donate an organ. That type of story. Gosh, we've had the guy that wrote the language for the movie Avatar. If you haven't seen that one, it's fascinating. He wrote his own functional language. He was also my college professor, and talking through living his dream, working with James Cameron, and just creating this whole community through this famous film. We've had a quarterback from USC who was the star, ended up getting injured, didn't really turn out the way that he wanted it to. He's created an amazing life for himself. So what happens when you have these dreams and life takes you on a different path? What does that look like? So it's a lot. I don't mean to ramble on, but we just really love to bring light and encouragement as people think through how they want to design their life and bring abundance to their life.
Yeah. Well, Amy, you come across and you're really sharing with others all that you've learned and what a neat perspective you have in terms of coming from a situation where you had to work through health issues. I have not ever gone through that, but I admire you for staying positive, for looking for new goals and new ways to succeed and move forward. So, as we wrap up, I want to thank you for joining me on the podcast today,
Yeah.
and also give you an opportunity if people want to find Amy Sylvis, Sylvis Capital, how can they find you?
Sure, sure. The best way is probably on LinkedIn. I love LinkedIn. It's such an incredible platform for education, connection, sharing ideas. So yeah, my last name's a little bit of a funny spelling, but you can find me over there on LinkedIn. The podcast, I'd invite you to listen to us on YouTube, Apple Podcasts, connect with us there. Then of course, our website, sylviscapital.com.
Fantastic. Well, I am going to watch more of your podcast episodes because the stories really sound fantastic. And we, again, appreciate you so much for sharing your time today, sharing your wisdom, and wish you continued good luck as we navigate this real estate cycle into the future, into this next rising cycle, in my opinion. So
Yes.
thank
Oh,
you again.
thank you so much for having me on. Congrats on all the amazing work that you're doing with this podcast. It's incredibly meaningful. And then, of course, on the real estate side as well, you all have been incredibly successful. And I'm just so honored and privileged to know you. So thank you for having me again.
You're very welcome. Lovely to have you. And we will, I know, keep the conversation going.
For sure. Bye.
Thank you, Amy. Bye bye.